Hi, everybody. I'm Sam. I am a research analyst at Messari. I cover Hyperliquid among other DeFi protocols and emerging topics. Yeah, I'll pass it off to you guys to introduce yourselves.
Sure, we'll go in order.
Cool. Yeah.
Yeah, guys, I'm Hart. I'm the founder of Across. We're a bridge, a cross-chain bridge, but we're very much focused on being the best bridging experience in Hyperliquid. Specifically, one of the things we're doing is making free bridging into USDH, which Zach can talk about.
Oh, yeah.
But trying to make it really easy to onboard into the Hype ecosystem.
Hey, guys. Fu here from Hyperdash, one of the co-founders. We're building what Palantir would build if they were building a trading terminal. And our goal is to build the best trading experience for people on Hyperliquid.
What a loaded statement. I like that. My name is Monica. I am the co-founder CEO of Hypersurface. We make volatility-based products, which basically right now looks like you can sell covered calls on your Hype, and you can sell cash-secured puts on maybe, hopefully soon, USDH, and other volatility-backed products, and excited to talk about derivatives with you guys.
Hey everyone, my name's Zach. I'm in growth and operations at Native Markets. We deploy USDH, which is the Hyperliquid native stablecoin, and has a distribution partnership with Hyperliquid, the blockchain, which is really exciting. And work with a couple of these folks. Not yet, Monica, but hopefully soon.
Sweet. I guess let's start kind of broadly. What are your guys' theses on why perps have become the default derivative structure within crypto as opposed to something like options, which we see much more prevalently in TradFi?
I love this question. This is like right softball to me, right? So we, as an options platform, I've thought about this extensively. I've been working in DeFi on options-related products for like 5 years now. And so my hypothesis, I have multiple of them, but basically in TradFi, the government wants to hold your hand, right? And they don't want you to do anything that could potentially allow you to lose your principal. And so the only thing that people are allowed to play with in TradFi, if you don't have a license, is anything that's fully covered. Like covered calls and cash secured puts are an extremely prevalent product. And because you can't trade naked futures in TradFi without a license, all of this land of like being able to speculate as much as you want is essentially verboten. And so options in traditional finance, people use it extensively because they have no other choice. Whereas in crypto land, training wheels are off. You can do anything that you want. And because people love to gamble, offering people effectively a gambling product is great. And perps are really, really easy to make because you don't have to trade the underlying. All you need is a price feed, and people can speculate on the price of something all day long. And so ease of access and lack of regulation means gambling is on.
So as a TradFi guy, maybe the only TradFi guy on here, at the start of my career, I was a rates trader at Goldman, and I traded a shit ton of government bond futures, like a lot of them. And futures are this product that do give you leverage on directional movements, let you go long and short, but have an expiry date. And you have to do this like roll thing every quarter, and you roll your positions from one to another. From a market maker's perspective, it's actually great, gives you more to trade. But from a retail perspective, it's super annoying and hard to trade. So that's one part. Then, when you think about what people want with options and the explosion you've seen in options volume in kind of call it the Robinhood TradFi play, options give you leverage, which people love. But I would argue that most retail traders want leverage without vol. They're not really looking to do, and Monica, we'll come back to where I think vol is really useful here. But I'd argue that most options traders, most Robinhood options traders are just looking for, 100x or 10x returns. And the perp product is like the perfect complement or perfect hybrid love child of these things. That just gives you unlimited leverage without having to roll your positions and without having to worry about price volatility. So I really do think it is like the ultimate retail trading product, is my take.
Yeah, to echo that, I think the reason is cognitive load. Ultimately, crypto leans very retail, and perps are arguably the easiest way to express a leveraged directional bet on an asset. No deltas, no Greeks, no expirations, and that is why perps have taken off.
I think the real question is like, when do perps eat institutional flow? That's the thing I find really interesting, because I think it's kind of like, it's pretty obvious to me from a retail perspective that the perp product is the better way for retail to trade. What is less obvious to me is if institutions will ever trade that way.
I still disagree with this.
Which part?
That perps are the best retail product to trade.
Okay.
I don't think that that's necessarily true. That there are occasions in which we have attempted to abstract away the things that are complicated and confusing about options into a product that gives you all of the benefits of vol without having to deal with all the downsides. We explain covered calls in a way that's just like a limit order with a time lock. And that is a great product for people who are already holding these assets, which you can't do with perps. You can't do anything with the underlying asset with perps.
I'm a huge fan of covered calls, like all the options strategies, all that, like really am. I'm just making the argument that like in the pie, in terms of what retail generally wants to do, it is like in that pie, retail generally wants to punt a directional position. And then there's like smart things they can do on top of that. That sort of like directional trading is the first thing people do. And then smart stuff is the thing that follows. Right.
Yeah, I think it's an interesting question of whether retail traders would prefer price sensitivity or time sensitivity, price sensitivity with perps or time sensitivity with options, and also what's best for most people. And those might be two different answers, but I think looking at like the proliferation of 0DTE options on Robinhood, and just the general mindset of like seeing prediction markets and sports gambling pop off, like I agree that being like directionally long in the easiest possible way, it just has massive product market fit across traditional finance and crypto. But I guess to take us, we kind of diving a little bit deeper into HIP-3, and just to clarify for everybody, HIP-3 was launched it was an upgrade launched in October, which allowed for semi-permissionless perp deployment. So essentially you stake 500K hype and then you can enter an auction to list your own markets for perps on the Hyperliquid front end. And so I guess my question for you guys would be, this permissionless deployment has led to a lot of different players that are all kind of building in the same arena, like equity perps, for example. Today we have 4 Tesla tickers with different quote assets. It's a somewhat messy experience, and arguably creates some liquidity fragmentation. And I guess the question is this a feature? Is this a bug? Is there something that you think is missing that makes having like the multiple different like quote assets or perps for the same asset possible? It's kind of open-ended.
My take on this is that, sure, in the short term, there is liquidity fragmentation, but competition is what breeds innovation, even beyond the HIP-3 deployments. And so you see a lot of these deployers go out there and build their own builder code products that are complementary to the markets. And that has a net, EV positive effect on the entire eco. And so I think the winners will play out over time, but in the short term, that competition is healthy.
I agree with Fu. I think there is a lot of innovation. I think we're seeing that in the markets that USDH is quote asset for. It's quote asset for some of the most unique markets, especially from the HIP-3 exchange ventuals who are providing access to things like private credit. And I think when perps are exciting, it's getting price exposure to something in a very simple way. As Monica said, you just need a data feed, not even a price feed, but a data feed and a collateral asset. And USDH, we think, can be the best one for that. And so, but then from a kind of markets perspective, having easy global exposure to different kinds of assets is able to grow capital markets for the underlying, because these things are tethered to reality. And so the demand that's expressed through perps, transmits down to the kind of the underlying. And so people around the world are getting access to Anthropic private equity right when it just raised a Series G or something like that. SpaceX is going public, just acquired XAI. And so those are kind of new frontier markets. Probably wouldn't have happened if all perps were just deployed by the validators. And I think, yeah, it is true. There are a lot of tickers. I think retail flow is mainly concentrated in just 1 to 2 of those dexes. And there's some short-term fragmentation, but there's also been an explosion of markets. I think it's been pretty undeniable that HIP-3 is a success for Hyperliquid itself. And yeah, to Fu's point, it's early, and we're seeing the market change kind of just in the past 2 to 3 weeks.
Yeah, just trade-offs, right? It's like the trade-off between, I think it's disingenuous to say that there isn't fragmentation here. There is, but the trade-off is permissionless innovation. And I particularly think, everyone in this room loves the Hypercore team, and they're like a small, tight-knit team that do a small number of things really, really well. And I don't think it's in the DNA of the Hypercore team or the Hyperliquid ecosystem to try to do it all in a single prescriptive way. And so, yeah, I think that there is just this trade-off of some fragmentation for the benefit of this open innovation. But it's not obvious. And I think if it was a different team and a different product, you could make different decisions with different outcomes.
We're also we're also so early, I think, in terms of HIP-3 innovation. We ended up talking with a lot of HIP-3 teams because we are collateral asset for 3 of the dexes and want to convince more people to offer their users the benefits of USDH. And I think we're going to see bigger names and new go-to-market strategies. So far, it's mostly been asset sponsors who are really launching these things. And I think that's not the long-term state.
I guess kind of to that point, imagine you are speaking to like a group of HIP-3 operators. What would you want them to list? Like, what would you request? What do you think would have demand that we don't have today?
I don't know. You guys know like pet project markets you want listed? Like I'm really bullish on equity perps. That's happening. I want more of them. I think the constraining factor is you do need a semi-continuous price feed here. And so that's the constraining factor where if you're going to have huge price jumps, the perp structure doesn't work. I think there will be a convergence between what some prediction markets and some of these perp markets look like. And I mean this not as a prediction market with a binary outcome, but kind of like betting on like numerical totals, like, the number of Spotify streams a given song gets. I could see stuff like that becoming a kind of hybrid prediction market, perp market. But I think the real low-hanging fruit is just replicating equity market exposure, like holistically on Hyperliquid.
Yeah, to Hart's point, I think it's obvious and straightforward to list U.S. equities and give people around the world exposure to U.S. capital markets in a much easier way than they could get probably can't get through traditional markets. I would personally love to see more global macro relevant assets, things like currencies, commodities like oil. So we're excited about Kinetic and Felix launching those things. I would love to see rates. I think rates is really relevant because I think there's a lot of people who trade crypto who have a perspective and a differentiated perspective on macro and really want to express that kind of stuff and could learn things like oil, rates, that kind of thing, especially without the really complicated structure of traditional futures and options for things like global rates or currencies. Just that kind of, pure exposure that Fu was talking about. Longer term, I don't think this is the right thing to do right now, but long term, I think I'd love to see people to think about perps more as a data feed rather than just a price or something with an underlying price. So things like the unemployment rate, things like, you could imagine, things that are kind of like prediction markets that Hart mentioned, like weather or something like that. Probably not the biggest markets and would take a long time to educate users about how to use them, but there's such a flexibility with setting up perps. I'd love to see people be more inventive in the same way that Ventuals and other people are.
Yeah, agreed. I think that there's a ton of opportunity that's underexplored with like interest rates, yields. I would say like unique indices too, like people being opinionated and saying like XYZ 100, for example. Do that for crypto. Like pick your own indexes or indices for L1s, apps, DeFi. Like get creative. I feel like there's a ton of opportunity. But yeah, I guess thinking about the different operators, we've seen a ton of demand from Trade XYZ. They did $3 billion in volume on silver multiple days over like the recent mania, which is crazy. That's like 2% of CME, the primary silver futures market. So like exceptional to see after 30 days after listing. But the other builder markets, or the other HIP-3 deployed markets have been like a little bit slower to scale. Do you think that's kind of a matter of a first mover advantage that Trade XYZ has? Is there like a market maker relationship thing going on in the background? Or what do you think it's going to take for like the other HIP-3 markets to kind of catch up?
I guess to speak to Trade XYZ's success, I think, you look at their pairs and they arguably are the most liquid ones today. There's also a community that they've cultivated with units, and, the team is essentially one that has been building in the community for a while. I think ultimately it is going to be a distribution problem for the other deployers in that it's not going to be up to the Hyperliquid UI to surface your market and your pair. You have to go out there and get distribution and become the most liquid venue for whatever pair you're trying to win.
I think as users become more sophisticated about the different ways in which the HIP-3 markets are different, like we do have 4 Teslas, but they are designed differently in terms of Oracle quality or Oracle construction. I think to Hart's point, we really would like oracles to be traded around the clock. And so having an Oracle construction that's robust, and also I would love to see more composite Oracle constructions. You have like a FX pair or something like that has a US component and then an EU component, a Hong Kong component. That kind of differentiation, I think, isn't part of the market or users' decisions right now. But as people see different options for them to trade, look into the liquidity that's different across different markets instead of just assuming that one market is the most liquid, I think those things will start to matter over time. And then, as there's kind of creative distribution mechanisms or hopefully new populations of traders who are coming in, I think Kinetic are doing a really good job of that, then that's another place where we'll start to see some pickup. And, to your point, Sam, there is there's a lot of movement in terms of HIP-3 and who's seeing a lot of volume.
Yeah. I guess pivoting a little bit to HIP-4, and just to clarify, HIP-4 was recently announced by the Hyperliquid team. It's a plan to upgrade for binary outcome markets, so similar to like prediction markets. How do you think HIP-4 stands up against Polymarket, Kalshi, kind of the existing prediction market landscape? What do you think it's going to take for Hyperliquid to kind of take somewhat significant market share from the existing players?
So the other business I run does Oracle resolutions for Polymarket. So I spent a lot of time thinking about this. And one thing that's worth pointing out is Kalshi is very US focused. Like their international business is through this kind of deflow mirroring, which I think is clever and kind of works. But there's a big non-US market. And both Kalshi and Polymarket are kind of increasingly focused on winning US market share. That's not totally true for Polymarket, right? Most of their usage is actually international. But I do think Hyperliquid is very well positioned to service other international jurisdictions outside the US with prediction markets. Whereas inside the US, there's all these like CFTC regulated prediction markets, which is not what Hyperliquid is about. And I actually think that space is pretty big. So you start, the biggest open question I have is like the UI and how you interface with these markets. But I think that the degen mindset, the same people that are trying to, use 10x leverage on Bitcoin perps are the people that want to trade silver with leverage, are the people that want to make some weird bets on prediction markets. And so I do think the user archetype fits very naturally, and it could be a really big opportunity for Hyperliquid.
Yeah, I think Polymarket has shown that retail is willing to come on chain if they can get exposure to these markets. Great UX there, right? And so I think Hyperliquid building these primitives enables builder code apps, other products and companies to come on and build really great trading experiences around these HIP-4 markets. And that's not to say that the Poly markets and Kalshis of the world can't deploy on Hyperliquid. Ultimately, HL is building the primitives, and if these folks want to come and deploy, they can expand their market share. That being said, I think Hyperliquid will fare really well in terms of the liquidity issue that is a problem currently on other prediction markets, and so really excited to see how that progresses.
Yeah, combo liquidity from Hypercore plus Cambrian explosion of many, many people trying to make prediction markets all at the same time. The same thing we've seen from HIP-3. I'm really curious to see how it's going to go. I think we're going to be able to bet on all kinds of bananas things that nobody's ever thought about before.
Yeah, we're obviously very excited about HIP-4 at Native Markets. All HIP-4 markets will be collateralized in USDH. And I think people underestimate also the innovation that will come from the Hyperliquid Labs team. I mean, Jeff's first company in 2018 was a predictions markets company. And so this is probably the most innovative team in crypto who has 7 years of experience thinking about market structure problems for outcome markets. And I think even just calling them outcome markets and recognizing how this market structure can be used, sure, for prediction markets, which are really hot right now, but also for other kinds of new financial products. A lot of the conversation just now started with perps aren't the best thing at all times for all users. And so having that ability to support all of finance, right, is really exciting for HIP-4. And I think we'll see a lot of innovation. You can kind of see it on testnet to the extent you can try to suss out what the HL Labs team is doing on testnet. But I think we'll see a lot more when HIP-4 goes live.
Totally, yeah. I think it's exciting to see Hyperliquid become a more complete product too, especially as they go up against like Coinbase and Binance. Like for me, my frame of reference is less so like how is Hyperliquid a competitive on-chain perp dex, more how are they competitive with existing sexes. I think that's probably the best mindset to carry if you're thinking about how Hyperliquid develops strategically. But yeah, I mean, like looking forward over the next few years, like what do you guys think will be the biggest driver of demand for Hyperliquid? Will it be perps? Will it be binary outcomes? Will they become just like the everything exchange? Is it going to be portfolio margin? Yeah, like what are you guys most excited about?
I do think it's the everything exchange. You take Coinbase's play and you make the decentralized version of it. And I think that is Jeff's vision. It's like have a very simple core set of primitives. I shouldn't call it simple, but a very robust core set of primitives, a very robust order book, and let everyone build everything on top of that. And I think that it is the decentralized permissionless innovation version of what Coinbase is doing in a US regulated way. And I think that is like a really compelling play. I don't think it'll win everywhere, right? I think there will be cases where people want a different experience, but I think it will win a lot of places, and it'll force the centralized exchanges to up their game.
Yeah, so first off, really excited about portfolio margin. I think huge catalyst this year. I think longer term, you look at Robinhood's business, right? And they have 11 product lines that are now doing $100 million a year in revenue. And there is a complementary version of that to be built on Hyperliquid's rails. So really excited about what comes out of that, right? From perps to prediction markets, binary options, you name it, lending, borrowing on the EVM side. And ultimately, distribution is one thing that I think has been incentivized to a point where in a couple of years from now, you're going to have thousands of front ends all bloom on Hyperliquid rails, and they'll each have their own bespoke offerings catering to that particular retail flow. So, in general, just growth on all fronts, distribution, new primitives. Yeah, exciting times.
I think that Hyperliquid's big win over like a Coinbase or a Robinhood is that Hyperliquid has us. They make it welcoming for us. for me to build a volatility product and you to build even better perps and you to build an even better bridge and you to make better stables and all of these like super welcoming environment for us to build even more things, even better things. And you can't replicate that kind of hunger and innovation spiraling out in all of these thousands of different ways that all of us are building with just a single company, just a single team. So yeah, everything exchange in every direction.
Yeah, I think I'm most excited about the long-term compounding rewards to the thoughtfulness that the HL Labs team have to all of the important primitives that you might need for building a really full stack financial product. You have the core exchange, they ship the Hyper EVM for projects like Monica's. You have like builder codes for front ends like Foo's, and then also thoughtfulness about setting up like the aligned quote asset framework for stablecoins like native markets, and really having focused and high quality builders in so many different verticals. A lot of chain teams are maybe kind of like this, but maybe don't have the fundamental technical innovation that the HL Labs team does. And I also think that they don't have the thoughtfulness about how to set these things up so that everyone can benefit, as Monica said. And so I think we're all so excited about the growth of Hyperliquid over the past 2 years and right now because it's one of the only things growing in crypto. But I think we underestimate how much more it could grow, even in a room of hype bulls, because of the thoughtfulness in each vertical, from stablecoins to perps markets to spot to Hyper EVM to outcome markets and the like. And I'm sure there's much more on the horizon. So
Sweet. We're at time, but I appreciate all you guys sharing your thoughts. It's a fun panel.
Thanks, Sam.
thanks, Sam.